Raytheon says they're up 11% organically, which is a lot of growth for, I don't know, they're not, free cash flow is only $5 billion. They're saying free cash flow will be 7 to 7.5, which is a pretty big jump. I'm very suspicious, as you can tell. That's still 27 times. I gotta short this thing, I'm sorry. Defense is not a growth industry. What is this, Soxol? Oh, semiconductor bull? Don't ever trade these 3X things other than shorting them, because they have to go down, right? If you need leverage, don't use the ETF. All right, S&P dropping, almost done 6%. I'd like to see this trade execute. I want to short RTX. And whenever you have a position, it kind of forces you to learn more about the stock. Still not getting filled, probably because I'm above the market. I think 700K is not enough, but if you have some other income, it's pretty good. Like, what are you gonna make, 10% a year and you have to spend it? That's tough. Assume you're gonna make less than you actually will. All right, let's look at Union Pacific. 600 million shares outstanding, 130 billion market cap. Connects 23 states in the western 2/3 of the US. Union Pacific, hence Pacific. They do bulk, industrial, and premium. Major West Coast and Gulf Coast ports to eastern gateways. Connects with Canada. Only rail system serving all 6 Mexico gateways. Incorporated in 1969. Not sure when it was founded, actually. I gotta learn my railroad history. Railroads were one of the most important businesses in America. They were the growth stocks in the 1800s and 1900s. S&P down 7%, wow. That means circuit breaker. How long is the circuit breaker? Make sure they don't hit the circuit breaker. Do what you have to do. Buy what you have to. Use the Fed. Buy everything. Don't let the circuit breaker trip. It's already over, right? Does that mean all markets are halted right now? Class 1 railroad, 32,880 route miles. Do you guys ever heard of a game called Railroad Tycoon? This is one of the first video games I ever played, on a PC at least. Bulk is grain, fertilizer, food, coal, renewables. Industrial, what are they shipping there? Construction, chemicals. I guess rail is still the most efficient way to go. And Buffett said it, that 50 years from now, 100 years from now, we still will be shipping by rail. There's something, almost by the laws of physics, that it is the most efficient way to do it. Air is not. Is it because of the actual rails? Less friction or something? Okay, so that's industrial, and then premium. Premium, they're shipping autos, auto parts, other types of merchandise in intermodal containers, whatever that is. Don't appreciate just how much is happening here. This stock would do really well if tariffs are real, right? Because more manufacturing in the US, more shipping, more railway usage. Yeah, it's definitely a goated industry. You go way back in time to the railroad tycoons, the literal railroad tycoons. Let me show you the game Railroad Tycoon. Yeah, I want to go spend some time, Luke, going back and reading some of the stuff. I read Carnegie's stuff. Oh, there's a Railroad Tycoon 2 Platinum Edition? New railroad formed, 100,000 shares of stock. Look how baller this is.
So the
sold to local investors.
Is
press any key to continue. January 1866. The country is young, and you go to the local cities. It's pretty cool. This game was so ahead of its time.
You may start like my
San Francisco. Look at that. Oh yeah. This is baller. When the train comes in the station, the graphics are insane. Okay, they really itemize this quite nicely. Average revenue per car, revenue car loads, gross ton miles, interesting. Number of employees, 30,000. Lots of performance metrics here. The average train length. Enough teasing, let me see the financials. Pretty high margin. It's about 50% margin. Nobody wants to be in this business because to actually send it from beginning to end, you have to own kind of the whole railway, right? So biggest cost is the people, working at the railway, but the second biggest cost is fuel. That's a pretty nice little business. One of America's, really a business that built America in a lot of ways. All right, net income, I'm excluding depreciation, which is a huge cost. So keep that in mind. I'm assuming I shouldn't be doing that, to be honest, but let me do it for now. I can always add it back later. Look at the revenue. It's like watching paint dry. The most dependable thing in the world, maybe, but Not too exciting, the railroad business. I think that's kind of the way you want it sometimes. You can depend on these cash flows and that's all you really care about. But they would be tariff stocks theoretically, right? If we really do want to remanufacture. Okay, this is going to be interesting from a PP&E perspective. I want you guys to look at this because this is kind of the quintessential Buffett stock, right? But why? Let's look why. 58 billion in property, plant, and equipment. They call it properties. That's funny to me. So the bulk of the balance sheet is that property, which is the railways. They're really expensive to build. They're worth $58 billion. You cannot just... And the interesting thing about that property, plant, and equipment is unlike other businesses. Remember when I mentioned Linde, the gas company? You can decide to say, you know what, I want to just extract argon from the air. I'm going to extract argon, I'm going to sell argon. Cool. You could own the argon market and Linde, you could beat Linde at their own game. You cannot do that in railroads. You cannot just build 30,000 miles of railroads overnight. You know, getting the permits would be impossible. Some of these railroads have been there 150 years. So this is like the best moat you can possibly have. And again, you know, I'd like to look at the physics. I mean, what's the one thing that could beat a railroad? Hyperloop? I mean, that didn't work, right? And Hyperloop, to make 32 million miles, 32,000 miles of a Hyperloop is not going to be easy, if basically impossible. So railroads will literally be here in 100 years, which is Buffett's point, is that you can discount these cash flows 100 years out. Can you do that with Microsoft? Can you do that with Apple? Probably not. You know, those are some of the best companies. I can't discount some of these things 5 years out. You can take the discount rate for this company, it's like right as rain, like 6% discount rate for equity. This will be here forever, long after we're gone. Except for Brian Johnson, he'll be here. Well, the only thing that'll be here longer than Union Pacific Railways is Brian Johnson. He's figured it out. It's not even that levered. I thought I was expecting like massive leverage. Okay, so you got 160 billion EV. I'm so happy I got a chance to look at this company because it's fascinating. And it's a piece of American history too. Let's do a shortcut. Let's just do cash flow from operations like this. And let's just do CapEx like that. It costs a lot to maintain this railway. And CapEx right now is actually higher than income statement's depreciation. It's a very important concept to get. So 6 billion free cash flow, 26 times. That's not bad. Why is that not bad? Because it's an indestructible company. Let's look a couple more years back. I'm curious. Okay, so they grew. I think, was there a merger? I don't think if they have any organic growth at all. Okay, there wasn't much growth here. They have a union risk, right? It was the Dale Carnegie. Was that more steel workers when he broke the union there? Everyone hated Dale Carnegie. I was reading the book like, yeah, get him. I think Dale Carnegie is pretty, not Dale Carnegie. Why am I saying Dale Carnegie? Dale Carnegie's the guy that wrote the book. How to Win Friends and Influence People. I'm thinking about the big boy Carnegie. Andrew. The guy who made Carnegie Mellon. That's right. Carnegie Hall. Legend. That Carnegie, who Dale Carnegie was absolutely not related to, by the way. And I think it was Carnegie, by the way. Carnegie. I think he was pretty vicious with those unions. I think he got into some human rights violations. Not great. See, this is much more a value stock, right? I was talking about Shopify yesterday where it's like, okay, this company's half management, half assets. When you look at the stock price, you're trying to figure out how much of this is the current assets contributing to the stock price and then what management's going to do. Here, like a drunk person could run this railroad, right? Like it doesn't make a difference. There's nothing to do. It's just literally anybody could do it. And then an example of a company where almost all the assets are future value would be, say, Tesla for management. Whereas, you know, something like this is like management has basically no future value. They can't really do too much other than buy back the stock, which I think is what they do. Okay, so I get a pretty nice share price. And if tariffs are real, these guys will be transporting all the new American manufacturing stuff you guys will be making. You're gonna work in the manufacturing facility, you're gonna load up the truck, you're gonna take it to the railroad port, load up the Union Pacific boxes. Yeah, that's all your future jobs. No more product mommies, no more CSS, no more sending emails. This is the kind I like to long, and I like to short the fake make-believe companies. Okay, so I'll get some books on the historic railroad business. I think it'd be a lot of fun to look at. Got some requests for Argenx, Alibaba. It's probably down 5.6%. I can refresh our Argenx. That can't be too hard. This is a $39 billion US biotech, one of the biggest biotechs. All from one drug, VYVGART, which was, I think, okay, it's a 32 billion cap right now. This was like the first FcRn mAb, although this is a soluble receptor, I think. So it'd be a good time to refresh on it, actually. Argenx, 32 billion cap. Let's look at the FDA website. So here's VYVGART. It was approved in 21, end of the year. 𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗙 market cap, 30 billion market cap, market's sort of assuming it'll do 3 billion peak sales. Right now, it did 2.2 last year, so well on its way to surpass that. But we have to look at the curve, well on its way, I'd say. 400, 1.2, 2.2. So pretty robust growth there, should continue. Now, what do you use this drug for? That's the question. Let's take a look at the integrated review, which FDA does now. These are really valuable documents to read. A lot of people don't know they even exist, but they're super valuable. Okay, they submitted the BLA 12/17/2020. They got a standard review, so 1 year full approval, neonatal FcRn blocker. I think it's a soluble receptor. So they clone the receptor, IV that, and the patient has circulating receptor. So it serves as a decoy receptor. So this is for myasthenia gravis. GMG, or generalized myasthenia gravis, is an autoimmune condition that affects acetylcholine receptor. And basically the body forms autoantigens. The body forms autoantibodies to the antigen, which is the acetylcholine receptor. You need acetylcholine that binds the acetylcholine receptor for movement. You guys may be familiar from cassava. We talked about acetylcholinesterase inhibitors that block the enzyme called acetylcholinesterase. Acetylcholinesterase blocks or esterizes or removes the ester from acetylcholine. But acetylcholine is just necessary for all nerve transmission. So in myasthenia gravis, you have all kinds of weird symptoms, particularly fatigue and something called psoas, which is an eye. This weird eyelid droopiness. So if you ever see somebody looking like that, you might say, gee, you might have myasthenia gravis. But there's other symptoms of myasthenia. Weakness, fatigue, voluntary muscle control, breakdown in communication between nerve and muscles. That's a good way to put it. Difficulty swallowing, breathing, etc. So rough disease, and for a while, because there's autoantibodies, I should say, Rituxan, which stops B cell production, is extremely effective. But Roche, the Genentech, never went and got approval for it. You know, now their best-selling drug is for MS. Again, a disease where sometimes you have autoantigens, sometimes you don't. Sometimes you have an autoantibody response, sometimes you don't. So they could have and should have gotten a GMG approval. Lots of people have myasthenia. It's a very interesting disease. I considered developing drugs for myasthenia gravis in the past. Almost went full steam ahead with it. So again, if you're watching and you say, I want to make $1 billion, you could have, by saying, well, I need a CD20 antibody. Not Raytheon, Roche owns that. They're not giving it to you. But I need either to make a CD20 antibody or develop my own. And there was a company that had one lying around. And you probably still could do this. And say, I'll take that CD20 antibody, I'll develop it for myasthenia gravis, I'll do a clinical trial, I'll get FDA approval. This whole thing's going to cost you money. It's about $100 million. But the first few million, you could probably get it started with $2 million. And you can raise that $2 million from friends and family, people you know, funds, I don't know. Good luck. But once you do that, you've got a drug company. Take that and go to Wall Street and raise the next. Maybe you can make $3 or $4 billion. Now, by the end of all the dilution from the investors, you might own 5 or 10%. But you'll be the next 𝗍𝗂𝗃. Now you got to sit there and read all this stuff. This 200-page document. This has got to be seared into your memory. Thousands of more pages on myasthenia gravis itself. Talking to doctors who treat the disease. It's tons of work. And you might decide at the end of that work, wait a second, Martin was wrong. This would not do that well. This drug's a lot better, this VYVGART. Or doctors would use the generic. Now that's not the case. Look at 𝐒𝐜𝐻. 𝐒𝐜𝐻 is a CD20 antibody. It's actually an old drug, ocrelizumab from Roche. It was supposed to be like a backup for Raytoxin. Raytoxin for MS versus 𝐒𝐜𝐻 for MS, it's the same drug in my opinion. But they did the trials for 𝐒𝐜𝐻, they got approval for 𝐒𝐜𝐻, all the revenues at 𝐒𝐜𝐻 instead of Raytoxin. Raytoxin is now biosimilar. 𝐒𝐜𝐻 is going to be biosimilar too. They only needed 167 patients. That's a small trial. Maybe that trial cost $50 million. You didn't need $200-300 million. The phase 2 was 24 patients. They did 2 clinical trials, the whole thing. Oh, this is an antibody fragment. Okay. It is not a soluble receptor. Okay, there was a phase 1. Okay, primary endpoint. Pretty impressive. 67% MG-ADL responders versus 29.7% for placebo. Highly statistically significant. Improvement in activities of daily living, including motor function. QMG responder was 63.1% versus only 14.5% for placebo. Very impressive. So, great drug for myasthenia, but we also have to look at the data for Raytoxin, which I mentioned, and some other drugs, because they're not the only FcRn in town. And they're developing in CIDP, which has historically been treated with IVIG. Wow, 737 in Q4. So possibly going to do 5 or 6 billion. It's kind of a cheap stock. I've bought this before. Okay, get a little discount. It was at 600-700. Now it's 540. They have pre-filled syringe coming, which not that big of a deal. This could be a $10 billion drug. It also might be difficult to make a generic, although these days the biosimilars seem to do their trick pretty quickly. That's important. Now, they did get FDA approval in 2021, so they will have a little bit of time before patent expiry, but let's assume 2035. Nice thing about these drugs is they cost almost nothing to market, so your operating margins can be like 80%. I know that sounds crazy, but take it from a farmer bro. NPV 31 billion, market cap 32. All right, 35 billion versus 32 billion. Efficient markets. Okay, they do have a new FcRn, so that'd be good. That could extend the value of the franchise a bit. IL-6, not that exciting. I don't know why they would do that. This is a sweeping antibody, which Chugai invented the idea of a sweeping antibody. It's kind of a neat idea. So they're doing well, but the problem with something like VYVGART is you sort of are going to have an IP problem at some point. Let's see if they've got decent patents or what the story is. They probably get 5 or 10 more years than I think. U.S. patents are expected to expire in 2027. Yo! Oh, they also got that hyaluronase. So that might add a little bit more time too. Even 1 year matters, actually. Yeah, I mean, I think they could probably do more to get the IP just right. That hyaluronase helps. Look at all the diseases they're going after. It kind of reminds me of the next Alexion. But Alexion did top out at 40 billion, you know. But they'll probably be acquired at some point here by Pfizer or somebody desperate to grow their company. So, I like it. Oh, you guys want to do Blackrock instead of Applied Materials? Okay, overwhelmingly Blackrock. Yeah, we should do polls there as well. Blackrock 850 a share. This looks like a SEC filing. I'm sorry, a sell side note. It's kind of funny. So Lawrence Fink, I guess you guys have heard of him. 11.6 trill in AUM. That's not too far from Schwab. The market cap is roughly the same. 157 million shares outstanding. 133 billion market cap. Just a fair warning, I'm going to take a little bit of a half day today. Probably going to get started maybe another hour, but I'll be working on some cool stuff for you. We have international stocks imminent. I wrote a bunch of code for that last night. Coming real soon, I think our dividend function is about to hit prod. A couple of other things, but the big release is going to be international stocks. Oh yeah, futures too. Futures are coming very soon. So that's ag futures, index futures, all types of futures coming very, very soon. Okay, so BlackRock went from 10 trillion to almost 12. Revenue is a lot smaller. Revenue is just 5 billion. It's 5.7 billion. It was 4.6 the year before, so massive growth there. Pretty high margin business too. A big ETF business. 4 trillion in ETFs. They've got 3 trillion in index funds. They got $2 trillion in actively managed actively managed funds, institutional funds, so basically mutual funds, but probably some hedge funds and stuff too. And then they've got $1 trillion in retail. So mostly sort of institutional. I don't even know what retail product they have, to be honest. And they do some cash management too. Oh, and they even break it down here by product type. So equities, fixed income, let's take a look. $6 trillion in equities, $3 trillion fixed income, and then privates, $200 billion, liquid alts, $76 billion, currencies, commodities, $400 billion in alts. Alts basically mean hedge funds, private equity, venture, that kind of thing. Now, Blackstone is their PE partner, right? So it came from the same company. So this is 3-month revenue. Let's do full year revenue. Full year revenue was $17 billion for 2023, call it 18, and $20 billion for 24. Compensation, by far the largest expense. Got to pay those big Wall Street execs. Distribution and sales costs, direct fund expenses, so it's things like research, sub-advisory fees, lots of fees on fees on fees. General administrative, that's corporate headquarters costs, that's a lot. We'll slim that down a bit. But in the scheme of things, no big deal. $7 billion profits, then they some interest and stuff like that. I'll take that at face value for now. Pretty robust taxes as a U.S. company. They do $5 billion a year in ETF revenue. It's amazing. Do they have the SPYs? Is it BlackRock or State Street? Yeah, it's BlackRock. No. SPYs are State Street, right? They have IVV, which nobody trades. I mean, actually, the ETF, that's not bad. IVV is a lot. So they do iShares. 5 in revenue from ETFs. 8 in total from equities, including through active management. They don't make much money on index funds, interestingly, but about a third of their revenue is equities funds. $4 billion in revenue from ETFs, $2 billion from alts, so $15 billion from those funds. Investment advisory, and they get a little bit from other things: distribution, technology, advisory performance fees. Like, it's mostly, though, looks like 3/4 of the revenue is from kind of investment products, and of those, half is equities and half is other, and of that, most of that is ETFs. So ETFs is their biggest things. I think they share those, right, with the manager of the funds. The fund managers get some and the company gets some. But for ETFs and index funds, there's no real manager. So those have less revenue, but probably almost no costs. Okay, they break down general administrative. A lot of it's technology. That's their biggest cost. Is that stuff like Aladdin? Every now and then I'll show the portfolio. Here, let me show it now because I haven't done this in a while. We got from biggest short to biggest long. Biggest short is Rigetti, then IonQ. These are 5 and 4% of the portfolio. Then we get Anavex, which is about 2.5%. D-Wave, which is roughly 2%. I want to add to D-Wave. INMB, roughly 2%. QUBT, roughly 2%. Then we're short Raytheon, or RTX, I should say. Capper, Huma, Strategy, RXRX, and that's it for our shorts. So that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 shorts total. In terms of what percent of the portfolio that is, I want to say 15% of the portfolio. Add it up just to be a good steward here. Let me see. Okay, 24% of the portfolio is short. On the longs, we have PHAR, Tarsus, American Express, Sarepta, Resolute, PayPal, IVVD, Google, Union Pacific, Meta, and NVIDIA. And that is 10% of the portfolio. So we got 25 short, 12 long for 13, which is roughly market neutral. That's not too much exposure yet. I do want to add to some longs here just to get things a little more in balance. So let me see. Let me add to Sarepta. That's a good one. It's a little risky because it's a biotech with basically one drug. And it's not really one drug, but it's a biotech, and they're sort of on shaky footing to some extent, and that's the opportunity. I think they'll get out of that shaky footing pretty easily. So now Sarepta is our biggest. Is it? No, it's not yet our biggest long. It's our third biggest. Meta and NVIDIA are pretty stable. We bought NVIDIA at 99. Really good buy there. Should have bought more. I'd like to be neutral, Ken, but it's not a religion to me. Like, I don't really care that much. I just care that I'm doing good stock picks. Like, that's much more important to me than maintaining some religious, I do think we're slaves to biology, unfortunately. I mean, we love to transcend that, but it's difficult. I have my druthers just to sit here and work all day. Yeah, I never knew who HPS was, and I thought I knew a lot of the alts. So it sounds like they're an alt. And they've done this before. They bought I met these guys. They bought, I met the principals, this other debt guy, GT. Okay, so free cash flow for Blackrock's 4 or 5 billion. I love Trump. It doesn't mean I can't make fun of him a little bit. Yeah, RTX is wildly overvalued. So 5 billion free cash and 25 times earnings. Or 25 times free cash, sort of 17 times. They get different numbers from me. Well, I guess they're expecting a big boom in next year's earnings, in which case, I mean, it's actually pretty attractive. The difference between TTM and FTM, right? Am I right? So they integrate that deal. I don't know how much more room they can get on the ETF side or on the active management side, and we go into a downturn, fees drop, right? They've had it good for a while. So I'd probably stay away from this one. But it's interesting to learn it a bit. I'm exactly break even on this account. Yeah, I'd love to be selling them a hedge fund or private equity fund. And look at KKR. I mean, KKR, Blackstone, some of these valuations are just absolutely nuts. Oh yeah, I have to get option approval, you're right. Yeah, I like Robinhood. Yeah. Yeah, Blackstone, the 72nd biggest company in the world. Imagine if them and BlackRock were still one.